This is the Construction Leading Edge podcast from constructionleadingedge.com. My name is Todd DeWalt. I'm the founder and host here, and we are all about helping construction business owners and leaders create businesses that create freedom, impact, and wealth. Today's interview is with Catherine Tindall. She is an entrepreneur, a CPA, a partner at Dominion Enterprises, and she specializes in advanced tax reduction. And what that means is she's an expert on the employee retention credit, which is what this episode is all about. And what this means is that she can help you, if you're a business owner, get money back in the form of a check from the IRS. So what's in it for you? If you own a business, or if you work for a business, or know someone who owns a business that survived through the pandemic, this episode could be worth a lot of money. Here's what's in it for you. You'll learn about what the employee retention credit is and why it exists, how the employee retention credit, or the ERC, is different from PPP or the EIDL program. You'll learn about how to determine, a very simple way to determine if you might qualify. We also talk about some misconceptions about the ERC and why your bookkeeper, your CPA doesn't know about it, or why they may even tell you you're not qualified for it and why they may be wrong. You'll hear about a couple of case studies of businesses that received substantial checks for the employee retention credit. Some may even be life-changing checks. I'll tell you, one of my clients shared with me just a few weeks ago that their bookkeeper told them not to bother applying for the ERC, told them they wouldn't get it. Even if they did get it, it would take months and months and months. And they said to me recently, Todd, we received a check for $140,000 from the IRS. What would that be like? And then we'll talk about when the deadline is for the ERC and when it goes away. So if you think, let me just give you a shortcut. All right. If you think you might qualify, if you think you might qualify for the employee retention credit, go straight to this website. Hit pause right now. Go to dominiones.com, dominiones.com. Click the button that says, see if you qualify. And then when you fill out the form, be sure, or when you talk to them, be sure to let them know that you heard about this from the Construction Leading Edge podcast. And maybe you're not a business owner, but do you know someone who owns a business that was affected by the pandemic? Maybe a restaurant or a bar, anybody in food service or in hospitality that was hammered by the pandemic. Maybe your local fitness center or CrossFit gym. Could be a subcontractor or a supplier. Maybe it's a client's business, someone you work with, or a friend. If you know anybody who owns a business that was affected by the pandemic, send them a text, send them an email, tell them that, hey, this may be something that that's worth your time. There could be help available, and have them go to www.dominiones.com and let them know there's help available. Here are a few resources I want to share with you before we get into my interview. If you own a construction business, I want you to imagine this. Imagine this scenario. You have a plan and a design for your business 2 years in the future. Your team has clearly defined roles and responsibilities today, and everyone knows what lane they're in. Your team is nailing the handoff from the office to the field, and your field teams have everything they need to finish instead of just having just enough to start. Your financial systems are dialed in. Your pricing work profitably, and you understand the story that your financial reports are telling you. Your team is solving problems quickly with fewer mistakes and without you. Your phone is ringing a lot less with questions, and fewer problems are landing in your lap. You're spending less time sorting through hundreds of emails or messages every day. That means you have time to think, to operate strategically, to be proactive. Maybe it's to go sell or to go work on another business venture or work on your business. You're present when you're at home with your spouse and your kids, and you have time for vacations. And then when you come back from vacation, you don't have to worry about what's waiting for you. How would you describe what that would feel like in one word? Think about it. What is one word you would use to describe how that would feel like? Think about it. What would that be like? Well, if you want to join the growing number of construction business owners we're working with to achieve those exact outcomes, then here are the first few steps. First, go to constructionleadingedge.com/apply, APPLY. Read about who our best fit clients are, and then if it makes sense, fill out a short form on that page. Our team will review that form, and if it looks like there's a good mutual fit, we'll contact you to schedule a strategy call. On that call, we'll assess where you're at, where you want to be, some options for how to help you get there. And if it looks like there's a good mutual fit, we'll talk about what working with us looks like. The first step is to go to constructionleadingedge.com/apply. That's constructionleadingedge.com/APPLY. Are you tired of chasing down field reports? Raken's easy-to-use software helps you connect the field to the office. That way, you get the progress updates you need without wasting hours on the job. With Raken's mobile app, field crews can share updates as they build. Everything from daily reports, time-stamped photos and notes, to time cards, checklists, and production data. All that field data is turned into a professional, branded PDF report, making it easy to see and share how a project is going. With Raken's web dashboard, the office can track projects in real time and find actionable insights to improve them. Give your field crews an app they'll actually use and get the data you need to build better projects. To learn more, go to rakenapp.com. That's RAKENAPP.com. Now, let's get to my interview with entrepreneur, CPA, and employee retention credit expert, Catherine Tindall. Enjoy. And I hope you get a check back from the IRS. All right, Catherine, thanks so much for being on the podcast. This is a topic that I'm excited to talk about, getting money back from the federal government. But welcome to the podcast. How are you doing today?
Good. Thanks so much for having me, Todd. I'm always happy to be able to talk to people about, ways that they can save taxes, because as a tax professional, that's kind of the most powerful thing that we have access to, with just understanding the different programs that are out there and helping make those things accessible for people.
Yeah. So one of those programs that is seems a little mythical, it may seem like a unicorn, is the Employee Retention Credit Program. And that's what we're going to talk about today. It's a big deal. One of my clients shared with me that they got a surprisingly large amount of money back, not just like a letter that said they would get this money back, but actually a check. And despite what their accountant told them, came back much faster. So we're going to talk about this Employee Retention Credit Program. So let's start with that. What is it and why does it exist? And then we'll get into what the opportunity looks like and how to take advantage of it. But let's start with that. What is the Employee Retention Credit Program and why does it exist?
So the Employee Retention Credit, it's a payroll tax credit. And like you said, it comes back in the form of a check from the IRS. And the nice thing with this program, unlike the PPP, is it's not a limited fund pool. So as long as you get your application in before the deadline, you'll get your return back. And it's basically a refund of wages that you paid, wages and payroll taxes that you paid during the pandemic. So it's a one-time tax credit program that was put into place by Congress. It's been modified a bunch of times because it really is an incentive. It was an incentive program, but a lot of businesses who didn't take advantage of it during 20 and 21 when it was first started, because it's a credit, you have up to 3 years to go after it. So it's a great way to kind of recapture some of the expenses that you had in previous years if you can qualify for it, because of it's a one-time program that's still open. And it's a very valuable payroll tax credit comparatively to others. It's up to $26,000 per head per employee that you have. And it just depends on things like how many employees you have and how disrupted your business was. But that's generally how the credit works.
So let's talk about that. How, without getting too far into the weeds, how is it calculated? And maybe maybe you can decide how to attack this question. One is either how's it calculated, or maybe there's an example business with a certain number of employees, however you want to address that.
Yeah, so I can give you a basic example that might be the easiest. So, a construction client that we had recently, they had a headcount of 19 people. They had 3 employees that were family members, so those people don't count. But they had 16 on their staff. And basically what we do and how the analysis works is you start off by saying, okay, how many quarters are you guys eligible for? And it depends on 2 different factors. The first factor is, did you meet certain revenue decline requirements per quarter, which is an easy calculation for us to do because we just look at some quarterly profit and loss statements to determine that. Or the second way you can qualify is if you had government orders that modified, forced you to modify your operations. And so common examples in construction are things like, if you were required to do social distancing requirements that reduced how much operational activity you could do, if you had to do certain sanitation measures that made you lose a couple hours a day to having to sanitize everything, any of those kinds of restrictions like that forced your company to have to change operations can also trigger eligibility. And so when we looked at this company, we looked at those factors, and for them, they didn't have, significant enough operational disruptions, but they had significant enough revenue disruptions that they qualified for 2 quarters. And then they ended up qualifying for $175,000 back. And that's, comes back in the form of checks in the mail. But that's the basic process of it. The first step is how many quarters are you eligible for, either by revenues or by government disruptions. And there's very specific rules around both. So that's part of, getting it, assessed by a tax professional. And then once which quarters you're eligible for, it's just a matter of calculating the credit based on how much wages were paid to those employees. And then there's some things that interact with it. If you pay health benefits, if you had PPP money, things like that will interact with the credit. And so it just comes into part of the calculation. But, for them, it was, 16 person head count that qualified, and then they qualified for 2 quarters, and it ended up being $175,000, of cash back to them.
So who might qualify for this? I'm sure most business owners who have employees who are listening to this are wondering, am I a candidate for this?
Yeah.
So how can they go about determining that?
Yeah. So I would say, the first, in general, who I see qualifies is, if you had revenue disruptions. So not that you were less profitable year over year, but it's based on gross revenues. So if your gross revenues were volatile quarter over quarter, so they're not, in a consistent growth pattern, that would, trigger eligibility. Or the second piece is that if you had operational disruptions from government mandate orders. So if you can point to, hey, I'm operating I know you're in Kentucky. Hey, I'm operating in Kentucky. And, the state had orders for us, for 6 months where we were not allowed to, have our full staff working because of social distancing requirements that we were forced to comply with. For those 6 months, you'd then be eligible. But I'd say for the most part, if you experience some significant disruptions during the pandemic, it's worth getting assessed because usually, at least for my firm, and I know a lot of other firms are the same way, it's kind of that initial conversation about the facts and circumstances for your business. We're able to determine pretty quickly whether or not it seems like you would be eligible for it.
The client I mentioned at the beginning received what turned out to be some bad advice from their bookkeeper. Their bookkeeper said, you're probably wasting your time. And they received a big check, 6-figure check back. And it seems like there are some misconceptions. There's some bad information out there. What are some of the most common misconceptions that are out there about the employee retention credit?
Yeah, I'd say the first one that I encounter the most frequently is people thinking that they're not eligible without having been formally assessed for it by someone who does them. Very often I'll encounter people where their accountant told them that they were not eligible, or their bookkeeper told them that they were not eligible, but didn't actually go into the weeds of getting the information to do a full assessment of it. And like you said, like that previous example I mentioned, it can be a really significant tax credit for people. And so if you've got somebody who's a financial professional that's just kind of shooting from the hip and saying that you're not eligible for it, it's worth getting a second opinion. Especially if they don't do that kind of credit work themselves. It's, they don't really know how the program works, right? Unless they're doing these and doing a lot of them, how are they actually going to know? Because they don't actually do that kind of work. So I would say it's worth getting definitely a second assessment. And, that's a common misconception. The second misconception that I get the most often from people is, oh, I got PPP money, I'm not going to be eligible. Which that was true when they initially rolled out the program, as they made the two programs not able to, you couldn't take advantage of both, but they quickly realized that so many people did PPP and yet they had so much more expenses and disruption that you can do both programs. So you can take advantage of the ERC. And if you did PPP, it does reduce it, but I haven't had a single case come across my desk where they got so much PPP that it wasn't worth pursuing the employee retention credit. So that's another misconception I encounter a lot. I think the third one that's probably the biggest is people who are, they feel like they're hesitant to take a handout from the government is what they think that the program is. And unlike with PPP, which was a grant program, this is a tax credit and it's a refund. So it's really it's a refund of money that you've already paid into the system. And so it's not like you're getting a handout from the government. It's like if you filed a tax return and you were due a refund because you overpaid, for you to say, oh, well, I don't want my money back because that's a handout from the government. That's the other misconception that I get to around the program is people thinking that, they don't want to take more benefits from the government. They feel like they already got enough. But really, this is just a refund of money that you've already paid. So you're, fully entitled to it. And the government wants you to take advantage of this program because they put incentives like this in place because they're trying to, keep the economy moving, keep people employed and those sorts of things. And so that's why, they put this into place.
Yeah, that's a good way to put it. I don't think many people would mail back their tax refund check.
Yeah. Like, no, thanks.
I'm good. I don't take handouts from the government.
Yeah.
I don't want your money. Yeah. That's a good way to put it. So you're a CPA, right?
Mm-hmm.
It seems like some CPAs and bookkeepers and accountants either don't know about these credits or are reluctant or unwilling to go after these credits. And maybe rightfully so. But why is that? Why is this something that's just not widely understood? It's not widely known. Why is it that bookkeepers and CPAs and folks in the financial industry don't know about or don't go after these credits?
So for this one in particular, the most common thing that I see with people is it's a payroll tax credit. So a lot of CPAs don't do payroll work. And so they just kind of think it's kind of out of their realm and to just leave it to the payroll companies. And then I think for a lot of practitioners, in my industry, we've seen massive declines in headcounts. We've seen a lot of people leaving the profession. And so most people know when they've been working with their CPA, your CPA is already at max capacity, just trying to file regular income tax returns. So to try to tackle learning, and digesting 200 pages of legislation to administer a one-time tax credit program, that's kind of a big request to them, even though it's, it's very valuable for the people who can take advantage of it. And for a lot of CPAs, they usually have a mix of business clients and individual clients. And so if they only have, say, 10 or 15 clients that are going to qualify for this, that's a lot for them to learn how to do the program and take on the risk of, they're going to have to deal, if they do something wrong because they don't do very many of these, then they're going to have to deal with the IRS. That's a really big request to, any tax professional. And so I think and that's part of the reason why, like one of the things my firm does, and we got featured by Intuit for this is, I do these for other CPA firms, because for a lot of the smaller CPA firms, they aren't like the big CPA firms where there's special departments for this kind of credit work. It's just them. And so for us, we've kind of become that credit department for them and their clients because, it's massively valuable for the client. It's just really tough for the CPA to administer it. And I would say for the most part, the person that you want doing this kind of work is a licensed tax professional. I've seen a lot of other people in this space kind of, pushing these tax credits, but they're not actually, licensed CPAs with tax experience. And so I've, come across a lot of claims that were incorrectly done with some pretty significant dollar mistakes on them because, they weren't tax professionals doing the work. So I would say you want to work with a CPA on it, but, that's why a lot of CPAs have missed it or, weren't pursuing it because they're just so busy with their regular work that it was a really big, really big request to have them take it on.
Yeah, that makes a lot of sense. They have a book of clients doing just the normal stuff.
Yeah.
That's an incredible task to go learn some obscure one-time tax credit legislation. So that makes perfect sense. What are so you shared one example of a construction company that had 19 employees total, 16 who were eligible for this. Do you have any other case studies or examples, maybe a larger company, smaller company that you can share with us and what their results were?
Yeah. So it really, it's really driven on headcount and it's also really driven on location. So I've had clients where, they had headcounts of over 100, over 100 employees and they, qualify for over $1 million in credit. I've had others where they're much smaller and say they only have, 6 or 7 employees and they only qualify for 50,000 in credit. So it just really comes down to your facts and circumstances and what's going to drive that number up really is how much are you paying your employees? How many employees do you have that aren't family members? And then just how disrupted were you during the pandemic? And, do you live in a state and do you operate out of a state that had high regulatory requirements? So for the most part, I'm seeing the larger claims in states, like my local New England or California or New York, places that had more restrictive government requirements or, specific counties that had more restrictive requirements like, if you're located near a metro area, those sorts of things where they had more restrictive requirements. So that's really what drives it up. Plus just the, the pure head count. And like I said, it's up to $26,000 per employee, but that really comes down to, well, how many quarters, that's if you were eligible for the whole, every single quarter. And then also you pay the employee enough that you can get, the credit on all their wages. So, for the most part, I think most of the cases that I deal with, it kind of revolves around that, maybe $10,000 per employee is what it actually works out to. But it's really highly dependent on your company's facts and circumstances.
So you mentioned operational impacts. Seems like there's a spectrum of those operational impacts. On one end, the extreme end is you were shut down, no work, everyone just went home. But it seems like there are some other operational impacts, even when people were working. So you mentioned spending more time sanitizing. What are some examples? Maybe they're commonly overlooked examples of operational impacts that might make someone eligible for this, where people were still working, but their operations were impacted.
Yeah. So I'd say, the first thing we look at is what was the government mandate in place? And I ask people, what kind of government orders and restrictions were you subject to? Because that's what we have to point at is, okay, this is what the state was telling us we had to do, and we were forced to comply with this. So that's the first piece of it. And then the second piece of it is, okay, so we were forced to do, say, social distancing on all job sites, which, forced us to only be able to operate at 75% of our man hours because of that. That's kind of what we're looking for. And on the, the requirement of it, it's more than a 10% impact by either labor hours or, sort of revenue line is what it is. And so that's what we look for is, okay, well, what was the restrictions that you had? And then how did this translate into what went on in your operations? So social distancing requirements are a big one. Sanitation measures, if it was, okay, we were having to sanitize everything that we did. And so we were losing, an hour to 2 hours every day of work time due to the sanitation measure. That easily beats that 10% requirement, right? So that's what we're looking for is, basic things like wearing masks or, having to maybe space out jobs or something like that. Those don't rise to that level. It's when it's more than that 10% of messing with your operations, basically. And the other piece too that I see people get a little confused about is it really does have to come from a forced government mandate. It's not something where it's like, oh, this was best practices, or a lot of the government advice was like, we recommend you do this. It's really when you would have gotten fined if you didn't comply with this. The government was really forcing your hand. You had to do this, and those are kind of the gears that pull the eligibility is the being compelled to do it. And then also that it had more than a 10% disruption in what you're able to do for business. As far as the government piece of it goes, the nice thing with the revenue declines, and I've actually seen this with some other companies, is the revenue declines don't care about anything else, right? If you had your gross revenues dipped quarter over quarter, enough percentage points, it doesn't matter if that was due to you deciding that you wanted to scale down the business. It doesn't matter if that was due to, non-pandemic related factors, because the way that portion of the credit's written is, you either have the revenue decline or you don't. That's it. We don't have to attribute it to anything. It's just you either had the revenue decline or you don't. And so those are kind of the two mechanisms of it, for companies that'll push eligibility.
Let's talk about the process. What is the process for filing for the Employee Retention Credit Program?
Yeah, so the process is pretty simple. You have someone do the calculation. They'll take a look at your financial data, payroll reports, those sorts of things. They'll do the calculation for you. And then once they have the calculations, it's filed on amended payroll tax returns. And they're paper filed with the IRS, which, as you can imagine, anything that's paper filed with the IRS has a processing delay on the IRS side. So, for a company like ours, we usually have around a 2-week turnaround time from getting information to actually getting the returns to the IRS. But then once they get to the IRS, they sit. And so, most recently, I was informed that their processing times are getting better because they've allocated more personnel to that department. But you're looking at roughly, depending on the size of your credit, roughly, a 5-month minimum wait on these. But, as they're allocating more personnel, we're expecting that time to go down.
Gotcha.
And I should mention too, once they process it, you just get checks back in the mail. And then once you get those checks in the mail, you deposit them in your bank account and you can use them for whatever you want, because it's a refund of money you've already paid. It's not like you have to, like PPP, where you had to tag it for a certain purpose. This is really just them paying you back. So, if you want to buy the boat or, get, more equipment or whatever you want to do with it, you're really not limited to use with it, which is, really nice.
Yeah, I think that's an important distinction. There were a lot of strings attached to the PPP money, and that's not the case. And there's no other reporting. It's just you get those checks in the mail and you can do what you want. Yeah. Given the market conditions right now, it might not be the time. Might be better just to sock that money away and build the war chest a little bit. The boat may not be the best investment, but you know what?
It could be a hedge against inflation. You never know.
Could be. We're not here to give investment advice, right?
Yeah.
But so go for it. So you mentioned sounds like there's a pretty significant process to go through. What are some things that can be done to reduce the turnaround time in claiming those credit funds?
With the IRS or, with a provider?
In the overall process, is it better? What are some things if somebody's like, I don't want to wait 5 months, or I don't want to mess this up. I don't want to turn 5 months into 8 months. Are there some things they can do, some best practices to reduce that turnaround time?
Yeah, I would say on the IRS side, we don't have a lot of insight into what's going on over there yet, because they, as far as I'm aware, and the other practitioners in this space that I've talked to, they have not begun auditing these. I would say the easiest ways to get the process really elongated is to work with somebody who doesn't know what they're doing. Because part of what we do is our process, certain, if someone has an IRS notice or an inspection, we handle that as part of our engagement. But I would say, most often when I see other claims being filed, I see things that are, blatantly incorrect on them. And that will flag you in the system and slow you down. So it's good to work with somebody who does a lot of these, knows what they're doing, and is able to get you through. And then I would say, as far as before things get filed with the IRS, how to speed things up is, the kinds of reports that we look at, just, kind of so it's things like quarterly profit and loss statements. It's things like what were the government orders that you had in place, payroll reports that are usually pretty easy to just have the program spit out for us. And then if you had PPP funds or any other grants, the information related around those. And those are really the reports. So if you're an organized person, you kind of have those things at your fingertips. Usually when I work with people, it takes them maybe 30 minutes to an hour to collect all the reports that we need. And that's what's going to speed up your turnaround time. I would say the other piece that also will speed up your turnaround time is if you work with a company that's specialized with doing these, like ours, like our firm. I've seen like other CPAs, you give them all your paperwork and then they drag their feet to actually get the filing done. So, with a firm like ours, this is kind of our bread and butter. So once we have all the information we need, we can, very often we have claims processed same day. So it's just, a matter of working with somebody who's used to doing a lot of them and can get them through quickly. Because oftentimes if you're going to your CPA to do it and like you're their first claim, not that they're going to make a mistake, but it is more likely in that, what would take a firm that's used to doing these, a week or less is going to probably take your CPA a lot longer to do, the same thing. And so that will slow down your turnaround time too.
Yeah. And I know there's a deadline for this program, which we'll get to in just a couple of minutes. But before that, tell us about your firm, the name of your firm, what you do. And then in a few minutes, we'll talk about where people can go if they want to contact you.
Yeah. So our firm, it's Dominion Enterprise Services. We're a specialty CPA firm. So it's myself and another partner in our staff. We are a tax specialty firm. We specialize in doing these kinds of credits. We do them for other CPAs and other institutions. And basically we come in, do the credit work, get your existing tax professional up to speed on what they need to know about some things that interact with your income tax returns. And that's pretty much it. We developed a niche in this space because we kept seeing a need. And both myself and my partner are, longtime tax professionals. We've both been in the tax industry, our whole professional careers, basically. It's funny. Both my parents are CPAs too. So it's like I couldn't escape the profession, but that's basically our firm. And we're really interested in doing things that are high impact for clients. And that's part of why we got into doing this kind of credit work, because it's, it's just really joyful for me when I get to talk to clients and they're going to get a big refund and just how much of a weight it's off of them. And, I do a lot of restaurants as well. And so like, this is going to pay for all this new equipment that we desperately needed, or, this is going to pay off, a loan that I had that I didn't know how I was going to, get through it. And so I find that work really personally rewarding. And that's part of why we've pivoted the firm to really, going after these credits and making sure people are getting them, because it's, it's just one of those opportunities that, these things come up once in a blue moon, but they really do move the needle for businesses in a way that we find really, rewarding, and really kind of serves our mission with trying to use the tax knowledge that we have to really advance American business interests and really help small business owners, get what they're entitled to. Because all the big guys are doing it, like the big companies with the big CPA firms, like they take advantage of every this, that, and the other. And it's the small people who don't have that same level of support that miss out on these programs. And that's who these things are for. So that's part of, kind of our firm's mission.
Yeah. Are there any stories of businesses you've helped that have been particularly impactful for you, regardless of the industry?
I would say, for the most part, it's those, even with the claims, it's usually the ones that are the smaller claims where it hits closer to heart with, people where maybe it's only $50,000 or $60,000, which is kind of relatively a small claim for these. Just listening to them of just like the stress that is leaving because they know the money's coming. And just because especially for like the restaurant industry where they got hit really, really hard with the pandemic, and the people that made it through that, I'm just like astonished that anybody could make it through with the kind of things that they had to deal with in particular. And just the relief in their voice about being able to, that they know how they're going to pay off their loan, or, they have this ambition of wanting to expand, but they can't get any more financing because it's just so tough with the restaurant industry with the margins and everything. So being able to kind of be the person that's able to make that happen for them is just, I find that really, really satisfying, which is why I got into this kind of work in general, just because there's so much fear and confusion and misinformation. And there's a lot of anxiety that goes on around tax work. And so being able to be that bridge for people and help them, to get through that fear and anxiety and apprehension is just, I find it really satisfying.
Yeah. I work with a lot of small business owners. Sounds like you do as well. What advice would you give those small business owners who are scared of the financial side of their business? Especially on the construction side, most of them don't have an accounting degree. They got into the business because of the opportunity to build stuff. Mm-hmm. And the financial side interests very few of them.
Yeah.
And probably intimidates or scares most of them, a lot of them. What advice, or maybe it's not advice, but what would you say to those folks when it comes to the financial side of their business, to try to encourage them?
I would say for most people that I encounter in that space, you don't have to become the expert at it. You don't have to do it yourself. Your best interest as a business owner is going to be doing things to drive your revenue up, doing things like getting new jobs, doing quotes, driving your revenue up. And really, instead of you trying to become a master of this thing that's not a value add in your business, just sub it out. Find somebody else who can do it for you, who does it, and have them do it for you. And I would say the other piece that I always see with people, because an expense of paying a professional to do something is going to be less than the expense of you having to do it and losing that revenue generating time, right? You're going to be happier when you're out working with your clients, getting new jobs, making sure that things are going right, than you trying to do your QuickBooks yourself on Friday night. So I think getting that subbed out to a professional as soon as you can is something I usually recommend to people just getting started. But the second thing I would recommend is, don't make it overcomplicated. Know the numbers that you want to always have have the pulse of, what your cash balances are, what your receivables are, basic financial indicators that you understand, that you track, and just setting, having whoever's doing your books provide that information to you, and just making sure you're setting aside time to really know your numbers. Because really the whole point of accounting, it's just the language of business. You're converting your activities into dollar amounts so that you can compare them against industry standards, against your competitors, against yourself from the past, right? So it's just a way of translating business activity into information that you can use to make decisions and understand what's going on the big picture of things. And so being able to read a financial statement and track trends and those sorts of things, it's really useful to kind of know the basics of that stuff, because that's going to be the way for you to see what's going on, in the business in a way that you can't always see when you're kind of in the daily operations, because the numbers don't lie. So that's kind of the basic advice that I usually give to people.
Yeah, a couple of things I want to dig into. One thing I just want to amplify. You said that it's better for you to pay somebody to do this work. And there are people out there listening, I guarantee, who are thinking, yeah, but I just talked to this bookkeeper and they want me to pay them $75 an hour to do my books for me. And I just can't afford that. And what I would say is, you should be focused. If you're a construction business owner, you should be focused on $1,000 an hour activities, like selling, growing your team, putting systems and processes in place. If you're doing anything less than $1,000 an hour, then you're getting hit with the opportunity cost of the difference. So it's costing you $925 an hour to go do $75 an hour activities. That's hard for some people to wrap their head around, because they're like, well, I'll just do it on the weekends, or I'll do my books at night. But look, you suck at bookkeeping. You hate it.
Yeah.
Maybe you're doing it, but the information is worthless.
Yep.
So figure out, price your work accordingly to bake in. If you need 10 hours a month, if you need 160 hours a month of bookkeeping, figure out how to pay for it and stop getting hammered by the opportunity costs of doing stuff that you suck at and you hate, and it's costing you money. Yeah.
Yeah, absolutely. I think the other piece of advice too, that I always see people do weird things around is, don't just go out and hire a bookkeeper, talk to somebody who can help see through your whole system, right? Because for most people, you're going to want to have, an ERP system of some sort. Just having everything on QuickBooks is probably not a good idea. So you'll want to really think through, like, how are we doing our invoicing? How are we collecting our receivables? How are we paying our bills? Because if you can implement pieces of software and technology to do those things, that's going to drive down your record keeping costs. And it's also going to just make your process much smoother, like from collections and those sorts of things. So I think when people get into the like, oh, well, I'll just hire a bookkeeper, on the front end, you kind of want to do some more like systems architecting work of like, okay, well, how are we invoicing people? What system are we using for that? If I'm having my bookkeeper doing it and they're manually invoicing everybody, or it takes them an hour to put together an invoice because we have to track all the materials and stuff, that's not an efficient way to do that. And so if you can, spend 10 hours like going online and researching different softwares, or pay somebody to do it, if you've got a nephew or a niece who's like quick on computers and like can help you with stuff like that, like get help from other people and take the time to figure it out on the front end, because the more you can bake in time savings into using things like technology, if you're paying that bookkeeper $75 an hour, but you could be paying a piece of software $25 an hour to do the same thing. That software doesn't take sick days, that's going to be a better investment of your time too. So that's the other piece of it too that I recommend to people is don't just like, okay, I'm just going to, have a bookkeeper do this. If you really want to scale and grow an operation, you have to think in terms of systems.
Yeah. It seems like most people fall into this thinking trap, which is like just enough to start. Like they're thinking one step ahead. We got to get somebody else to do the books. So the simplest, easiest thing is, well, let's just ask somebody I know. Let's ask my spouse, my mother-in-law, this person, somebody I know, somebody in my network, and let's just hire them. Like that's the cheapest thing. It's like the easiest, cheapest thing. And then, so let's talk about, this is a question that I get a lot is, should I hire a bookkeeper, like an individual as a part-time local person, or should I hire a bookkeeping firm or an accounting firm to handle these things for me? What are some of the things to consider? In some situations, it probably makes more sense to go in one direction than the other. But what are some, how would you advise people to think through that when it's time for them to get some help? How would you help them think through that? Should I hire an employee or should I hire a firm?
I'd say for the most part, when you hire an employee to do something, you're only getting that one person's expertise, versus when you hire a firm to do something like a bookkeeping firm, you're getting fractional values of each of the people that touches your account ability, right? So if you've got somebody who's a high level controller ability, somebody who's an entry level bookkeeper ability, basic accounts payable, accounts receivable, and you've got maybe a team of 4 people that work on your account, but on a fractional basis, you're getting access to a lot more valuable knowledge base than just one employee. So for the most part, I usually recommend working with like a firm who does accounts like yours, instead of just hiring an employee. But it depends on the scale of your operation, right? Because if you're at the size where, it's a 40-hour-a-week job, no matter how much automation you put into it, that's going to be the point where you're going to want to hire internal accounting staff to do functions. But, I would always start off, if you're just starting and, maybe, you're doing under $1 million a year, or you're kind of in that 1 to 10 million space, I would definitely try to find a company that specializes in it. Because the other thing too, when you hire an employee, like now you're managing this person, now you're having to make sure this person's performance is good. And you're having to assess their work when you're not an accounting professional. So how do you know? And then too, when you go to get your taxes filed at the end of the year, it's like, there's usually miscommunications that can happen between the internal bookkeeper and the outside tax accountant if the tax accountant's a little hands off. So by working with a firm that does, is a bookkeeping firm and has all that, that's going to be your biggest benefit. And then, they'll usually communicate to you when it's like, okay, your account has gotten too big. You need to have an internal function doing this. But for the most part, when most people start out, or they're still kind of in that smaller, like 1 to 10 million space, it's like, just pay another company to do it. You ship it out, it comes back to you done. You're not having to manage a person. Expense wise, it tends to be less expensive or comparable. But really the thing is with your numbers is they should be driving most of your behaviors and activities. So getting them correct and also having them be timely for things like financing, if you've got a lot of different notes and things going on that you're having to manage with your bank or whatever it is, having that function of your business being professionally done is, I think, really valuable for most people.
Yeah. And I think there are a couple of other advantages to working with a firm. One is redundancy.
Yeah.
If you hire a bookkeeper and they are sick or they decide to quit, then they're gone. This happened to my brother is a business owner, and he was just sharing that with me that his bookkeeper's gone. And now he has to start from scratch. And that would not be the case if he had a bookkeeping firm that he worked with. And the other benefit to a bookkeeping firm is they bring their workflow and their technology.
Yes.
And you just plug into that. Whereas if you hire someone, they're like, great, I know QuickBooks, but how do you want your chart of accounts set up? And you have to develop all of these workflows they're part of. You don't have to do that. You can actually learn workflows from working with a firm. So good advice. What about what would you say to people who are if they're being honest with themselves, they're like, you know what? It's better that I don't know. The guy brought me in to run his company about 10 years ago, and he didn't want to know his financials. He was scared. He was classic head in the sand. At one point, I even heard him say, I feel like I'm losing $10,000 a day. He had no idea because
he probably was he?
Yeah. Well, I don't know. Nobody knows because he didn't have any financial data, and he made all decisions based on like snapshot looks at the bank balance. But he was afraid, had his head buried in the sand when it came to the financial side of his business. What would you say to folks who are like honestly raising their hand, like, yeah, that's me. I have my head buried in the sand. I don't want to know.
Well, I'd say at that point, if you're that kind of person, just what is it in your business that you love doing the most, right? Because usually when I encounter people like that, they're just very heavy into their operations. They like being on the job sites. They like being in the work. They like managing people. Like, what is it that you actually like? Because instead of you trying to correct a fear or a weakness in yourself, does it make more sense to bring in somebody else to take that on, right? It's like, do you want to be spending your time trying to correct weaknesses, or do you want to spend your time improving your strengths? And if something like, doing basic financial analysis or reading financial statements is something that's, kind of shuts you down emotionally, at that point, it's like, well, do you just need to hire a fractional CFO who's going to manage that stuff for you, and who's, you're going to have maybe a meeting once a week with, where you can talk through some of the stuff, but that it's not, the burden of the record keeping falling on you, or the burden of tracking your cash flow falling on you, because it's just really like, you just really don't have a taste for it and you just don't like doing it. I think it's good to really try to play to your strengths. And I think for most people, I think they don't realize, if you really want to grow and scale an operation, you have to it really comes down to the team of people that you have working with you, internal and external. And so if you're finding that something like your finance function is missing out, it's a matter of bringing on somebody that can help you, fill that out for you as, abilities that you have in the company. But I would say, in general, if you're a business owner and you can't read a financial statement, go on YouTube and watch some basic videos. Like, there are certain things that you do need to have a basic understanding, knowledge of. And, you just need to have that if you're going to succeed and be able to stay in business. But for the most part, I wouldn't put so much of a burden on yourself to change those sorts of things. I think the other piece too, that I would really advise people of is, when you're in that business owner space, you don't get a lot of advice from, your staff or people that you work with. And so it's really important to have like a peer group of other people who are in the same place as you that you can talk to. I'm a really big fan of like business coaching and getting, executive leadership training and things like that. They seem expensive, but when you start to change your mindset around, what's a good return on investment, what you should be spending your time on, what you should be tracking, what you should be doing, knowing what other people in your industry are doing and getting feedback and getting challenged. I think those are really value-added activities that you can do, and knowing your numbers and being afraid. I think it's kind of, I would just say, like, if that's where you're coming from, it sounds like you probably don't have a peer group who's challenging you. You probably don't have somebody that's coaching you and like, helping encourage you grow. And that you maybe need to take a step back and have a bigger look at your business of, where do you want it to actually be? What do you actually want to get out of it? And, what do you want to get out of working? Do you want to grow as a person? What are you actually looking for besides just, like a steady paycheck to pay for things, right?
Yeah.
So those are the pieces that I recommend.
Yeah, good advice. And if for those folks who have run into any sort of limitation or a fear, let's say something's outside of their comfort zone, a couple of things I would say is like all growth happens outside the comfort zone.
Exactly. Yeah.
And you need to lean into that discomfort because that's where the growth is. And the other thing is fear is it's irrational. And typically it's like this thin veil that looks impenetrable. And once you go through it, you realize, wow, what was I so scared of? What was I so worried about? They're numbers. And now I know. And I think I've been there personally. I've been through financial crisis, and there's frankly, I know a lot of people who've also been there. And when you've been through a financial crisis, there's some PTSD of sorts to deal with, but you have to push through that because otherwise you're going to stay there. Mm-hmm. You're going to be stuck there. And that becomes a ceiling, not only on yourself, but I was talking to a business owner who said he came out and said, I am holding my family back financially. The only person I've ever heard say this, but he was being honest. I am holding my family back financially because of his limitations. And that's a pretty tough pill to swallow. But the good news is these things can be learned. Financial skills are not something anyone's born with. It's not based on DNA. It's based on tools and skills and training. And the vast majority of people can learn these things. And it's definitely not something to be afraid of. So I appreciate the advice there. So let's wrap this thing up and talk about first the deadline. It sounds like this is there is a window of opportunity for the employee retention credit. What is the deadline?
So it's going to start phasing out next April, and then it will fully phase out the April after that. For the most part, I recommend people, if you think you're eligible, now is the time to do it because we do have a gap with the IRS. And then also, when you have that much money on the hook, like for you to wait another 6 months to reach out to deal with it, it's just going to put you kind of like a year behind. So it's one of those things where I always joke with people, like tax planning is like that one of the highest ROI things you can do on your time, because, for the cost of a couple phone calls and maybe an hour and a half of putting together reports, you could be looking at like 6 figures back. What else could you do in your business that's going to generate that kind of return? So it's like, just get it done and get it over with, and have the assessment done, because it is a limited window. We have till next April. But once that closes, that's it,
Yeah, so begins to phase out in April 2023, and then will be completely gone April 2024. So if people want to talk to you and get your help to file for their employee retention credits, what do they do? What's the next step? Where should they go?
Yeah, so you can visit our website. It's dominiones.com. You can click the button that says, do I qualify? I think it's on that page maybe 10 times. Just answer some really basic questions for us, and then we'll get you connected with the right tax professional, to do the assessment. Because basically what we do up front is we see if you're eligible, see how much you would be eligible for, without you having to, incur an expense for that. We just take a look at what your situation is, and then you can kind of have all the pieces you need to make the decision whether or not you want to pursue going after the credit, if it's, worth it. So that's our basic process. But just visit the website, put in some contact information, and we'll get in touch to, just do an assessment based on your particular situation.
Good stuff. So dominiones.com. Yeah, I'm looking at the website. There are buttons. Click here to see if you qualify, all over the place. Some interesting case studies, outline of the process of how it works. And so it could be, I can't imagine. I'd like to say that you could fill out a form on my website or have a phone call with me, and I could write you a $100,000 check. Probably not going to happen. So I can't imagine a good reason. Let me try to be more positive. I can imagine lots of good things that could come out of going to your website, filling out the form, and just see if you qualify. The worst case is you find out that, no, you don't, but it sounds like there's a pretty good chance that you will. So Catherine, I really appreciate it. Thanks so much for the work you're doing. Sounds like it's a pretty gratifying gig to be able to help get people checks back from the federal government. And thanks for that. And yeah, folks, go to dominiones.com. That link will also be in the show notes, and go get your employee retention credit back. So thanks so much, Catherine.
Yeah, thank you so much for having me, Todd. I always enjoy getting to talk through this and the just general entrepreneurship things. It's really, really enjoyed it.
Good stuff. Hey, thanks so much for listening. I have one challenge and one request for you before you go. Here's the challenge. What is your 5-minute action item from this podcast? In other words, what is one thing you want to implement in your business or on your projects that will take you 5 minutes or less? My challenge for you is to create an action item as soon as this podcast is over, and do it. Send yourself a text, send yourself an email, put it in your planner, write it down in your unicorn journal, whatever it is, but take action on something from this podcast episode so you get some real value from it. Now, here's the request. If this podcast has been valuable to you, please leave a rating and a review. Here's how to leave a review on Apple Podcasts on your iOS device. Number 1, open up the Apple Podcast app. Number 2, go to the icons at the bottom of the screen and choose search. Search for this show, Construction Leading Edge. Be sure to click on the show, not the episode. Then scroll all the way down to ratings and reviews, and finally click on write a review. These instructions will also be in the show notes. If you could leave a rating and a review, that would mean a lot to me, and it also helps get the word out there to other folks. And don't forget, if you want to get out of your business and make it run without you this year, go watch my free online training workshop at constructionleadingedge.com/get out. That's constructionleadingedge.com/GETOUT. Thanks so much for listening. My name is Todd DeWalt. I'll see you next time. Remember, every project starts in the field, and Raken's field-friendly software makes documentation easy. With Raken's mobile app, crews can document progress on the go, and you can track everything in real time right from the office. So, give your field crews an app they'll actually use and stay on top of all your projects. To learn more, go to rakenapp.com. That's RAKENAPP.com.